All right, what's up, everyone? It is December 2nd. This is the Sharp Money live show. This is episode number 6, I believe. I think it might actually be 7 because I missed one when I was on vacation, but we'll call it 6 for this. But today we have just myself and Sigma Squirrel. I think Jay might hop in a little bit. I'm not sure about that. But if you're new here, this is going to be the little bit of a layout. We'll talk about industry news to start. Then we will have a discussion on a certain topic. And today's it's more of a question than a topic today, but it's a question that if you could do something differently when you first started sports betting, what would you do differently now? So I think it's a really good talking point, and I'm sure we'll have some good conversations there as well. Before we get into that segment, though, we are going to make a special announcement after the news segment. We're going to have our first special guest on stream next Tuesday night. And it's going to be a guest that everyone's going to want to listen to. So we're going to hold that until we wrap up the news segment to tell you guys who that is. But we're really excited to have them on. Looks like Jay is just joined. What's going on, Jay?
What's up, man? Y'all make some room for me, please.
Yeah, you're going to slide in the screen here. All right, you're in. So we'll let Sigma start off with some news. What do we got this week?
Well, this week I thought, let's take the last month of news in the industry, because it's been substantial, and try and consolidate it into one view to give listeners and Sharp Money members an overview of just how bananas this prediction market space has become. And so what I'm going to do is show a visual from our friends at InGame. That's at InGame HQ on X. If you don't follow at InGame HQ on X, definitely give them a follow. It's breaking industry news and insight every day. There's a great follow for the industry, and I serve on the board of American Bettors Voice with Brett Smiley, who just is a fantastic journalist overall, but really knows the business. And so I'm going to show something here on the screen that I think is the best encapsulation of the current state of prediction markets that I've found. And so let me do that now. Here we go. So what, Robbie, can you see that?
Yeah.
Okay.
I got it.
All right. So this is as of December 1st, 2025. And so we still have all the retail sports books out there, right? And so when I say things like we're entering a golden age for sports bettors, this is exactly what I'm talking about, because the betting public has never had more outs than it is about to have. And so we're going to have all the retail sports books. We're going to have all of the prediction market outs. We're going to have all the exchange outs. But the headline here is everybody, including the retail sports books, with the exception of a few, are trying to become prediction markets. Like, nobody wants to miss this train in case this is a paradigm shift that becomes permanent. It's, validated ultimately by the Supreme Court. That's really a coin flip. But between now and whenever that happens or doesn't happen, it behooves all of you to really understand what's about to happen in 2026, because we're going to gain like 20 outs, and they're going to be varying degrees of sharper outs. Right. We all know exchanges and prediction markets, are tough to find edges. But the point is, if you have edges, you're never going to have had a better time to be alive in sports betting than the next couple of years. So I just want to take everybody through it. So let's take a look at this. All right. So starting on the left, again, courtesy of our friends at InGame HQ on X, who put this great visual together. Like this describes just how crazy this is. So already in the game or expected soon. This means they have a license to operate a prediction market. They're certified, right? Or their certification is imminent. You've got the kind of the first out of Kalshi, and that's really all we've been talking about. Founded in 2018, of course, a Y Combinator launch, the first regulated U.S. event contract exchange. Partnered with Robinhood earlier this year. They're partnered with Webull. They have an official partnership with the NHL, and Google Finance is integrating, their odds on everything, into feeds on Google now. So Kalshi's the current leader. The question is, are they going to stay there? Because kind of the global number one outside the U.S. is about to enter back into the U.S. after being in exile from the Biden administration over the last number of years, and that's Polymarket. They acquired QCX in July, and they're live in the U.S. So you can download the Polymarket app and get on the wait list to launch. But this is any moment. As soon as they verify stability, this thing's going live. So Kalshi will have a very formidable competitor. Prize Picks hooked up with Polymarket to offer Polymarket markets right in Prize Picks. They are also partnered with the NHL. The NHL has 2 official prediction market sponsors, which I think is hilarious. They're integrating real-time probabilities with Twitter, and Kalshi's got Google Finance. Polymarket has Yahoo Finance. And so those are the 2, you really want to watch as a sports bettor. You want to get really familiar with how these interfaces work. Number 3 on the list, you've got crypto.com in there. That's Underdog's prediction market partner. They also have a relationship with Truth Social, which is never a bad hedge against the current administration as do business with their family. They've got Truth Predict. That's in October. And then you've got some pretty interesting retailers that are in the space, notably FanDuel and DraftKings. And so they've each said in the states that we're not going to, where we don't have a license, we're going to offer prediction markets. So if you are in a regulated betting state, these markets will not be available to you. But if you're in California or Texas or another state, Florida, Florida, if you get kicked out of Hard Rock like anyone with half a pulse and the ability to be sharp, you're gonna pick up some interesting outs there. And those 2 are gonna beat the absolute shit out of each other for market share. They're both in it to win it. It's going to be very interesting. These are customer acquisition juggernauts. Very interesting yet to launch. I'm going to skip number 6 because that was a big deal from Thanksgiving holiday week I want to talk about. Now you've got Underdog coming in, Prize Picks, as I mentioned earlier, and not to be outdone, Fanatics, the number 3 nationwide, OSB, is going straight at prediction markets as well with crypto.com. And so, if that's not enough, then you had this announcement last week, speaking to number 6 on the list, where Robinhood, that is 50% of Kalshi's order flow, and Susquehanna International Group, or SIG, which is the market institutional liquidity provider for Kalshi, got together and said, you know what, we're going to do this ourselves. And so Robinhood and Susquehanna are going to launch a Robinhood native prediction market that is separate and distinct from Kalshi. And so, Kalshi investors are probably wondering, is it really worth the money we think it is? Although they announced a giant capital raise today, so that's a little bit different. The point being, you've got Kalshi, Polymarket, Crypto.com, FanDuel, DraftKings, Underdog, Prize Picks, Fanatics, and now Robinhood Direct. That's all for sure happening. All right, that's for sure happening. And so in Illinois, I think we're blessed with regulated outs. I mean, we've got 12 or 13, here in the state. And that's great. You've got 9 new launching, you've got 9 total here with 8 more of these launching. Then you've got Coinbase. You've got Alex Kane in Sport Trade, one of the real pioneers in the industry that went the regulated model for his exchange. States aren't exactly pro-innovation. And so I think he's got the most credible claim possible that he deserves to be in this business. So you got Sport Trade launching, very, very sharp exchange, great operator. You've got RSBix. Now you've got Sleeper, a DFS operator, Splash Sports. So if, most of us are in a Splash Sports pool somewhere. I'm in like 7 of these things right now. I mean, Splash is doing great. They want to be in the space. Better wants to get in the space. They're actively pursuing Galactic Markets. All of them actively or likely pursuing entry into sports event contracts. Then you've got the already in, but not necessarily sports, right? They're in everything but sports. Kraken, Forecast, Truth Social, and Gemini Titan. Then you've got on the right, like all the other wannabe entrants here. So, then you've got, this lane, box full of acronyms. I think the most important in this purple area is ICE Futures. The international, ICE, essentially the largest, financial exchange in the world, formerly the New York Board of Trade, is now a wholly owned subsidiary of ICE, which is a publicly traded entity, a fantastic investment, if I do say so myself. If you are into holding long-term equity positions, they're getting in the business. Then meanwhile, you've got NoVig, ProfitX, IG Group, and InPlay Global, all saying they're looking at it. And so what does this all mean? It means for anyone in this business, you got what? 20 new entrants into the space. 20.
Yeah.
20 outs. It's 20 outs. Dime. I can't overstate how exciting this is. I mean, can you imagine how much opportunity there for price shopping and arbing and just value capture there is here? Meanwhile, all of them are going to be competing for our liquidity. So for our community, which skews to the sharp side, if you want to make markets, they're all going to be courting you. If you're willing to post markets, not just take liquidity, but actually post markets, an exchange without liquidity is dead. They're going to be paying you for your liquidity. So save those dollars, ladies and gentlemen, and take your business, your market-making business, to the exchange that pays you the best incentives to do it. That is the emerging battle lines here. I mean, we've been talking about this for a month or two now on this show. Get ready. Get smart on this stuff. Do your research. We'll certainly do our part to help you get educated, and we're building tooling to help you be sharp on this stuff. But man, Robbie, it is on. It is on.
For sure.
That's the take, man. It is. Get ready to rumble.
It is for sure. And that's why we've been kind of preaching just, even if you're not placing a bunch of bets on these prediction markets, understand how they work and just get comfortable with it. We have a really good question here because I think this might be a concern for a lot of people. That EV betting will just be dead because the market will become so efficient here. So I do think that the traditional top-down betting will likely not be as effective once these markets get so efficient. I do agree with that, but I think it'll be like a different style of betting where it might be kind of more like the stock market, where you're looking at certain buying and selling patterns, identifying which way the market is moving and trends like that. But I think the early stages of this, which what Sigma is talking about, is the incentives that we are going to have to trade on each of these platforms because they're competing for our dollar. Right now, in the US, for the only prediction market we really have access to is Kalshi. And to be honest, we all been talking about how terrible Kalshi is right now because you can pretty much get a better price on FanDuel any day of the week. And obviously NoVig beats them by a mile every time. But when Polymarket launches, Polymarket has 0 fees right now. And there's no reason for me to trade on Kalshi on, a price that is 1 or 2% off of the Poly number. So Kalshi needs to do something, whether it's reduce fees down to 0 or give incentives. And then like you said, the best customer acquisition companies pretty much in the world are probably FanDuel and DraftKings. So what do you think they're going to do when they launch their prediction market? You think you're going to get a couple free offers? It's going to be like the same surge of when new sports books come out and there's all these promos. You're going to get rebates for posting liquidity. You're going to get, rebates for doing all types of things. There's just going to be rewards all over the place. And we're going to be able to reap the benefits. And just understanding, EV betting in general, understanding fair value prices is just going to give you a huge leg up in this market, I believe. And I can't tell you exactly what this landscape is going to look like, but if you are an EV bettor, you're a problem solver, you're around the right people, like everyone in Sharp Money, like we will figure it. There's an edge to be had. We're going to figure out, we're going to talk about it, and we'll make money as a group for sure.
Yeah.
That's exactly right, man. And Abide is saying, is this the end of EV betting? I mean, no, it's the beginning of a new way of doing it. And so what is EV betting? I think what you're saying is it the end of top-down betting?
Yes.
No, it is not. It is not the end of top-down betting. In no way, shape, or form is the end of top-down. What it also is an absolute doorway for anyone who wants to model and create their own fares on pricing. And so if you can create sharp fares and price these markets, you are going to be the most in-demand individual on the planet with your liquidity. And, for our Sharp Money members, we already give you fares in our VIP service for the player props that we ship. We ship fares. We tell you, and our members have been doing this for last year plus. We're Dime, what, a year and a half? Here are the fares. If you can get your size down at a retailer, here's the retailer with the best price. But if you want to make a market with our partner NoVig or with ProfitX, here's the fare you should take. And you know what? Our members get those fares down. And so I know Dime and Jay, we're thinking a lot about what's the value added service that we can provide to the community in a world where you've got 25 market making incentives all coming at you. If you've got fares and they're good, you can do very well in this business. I mean, that's what we just trying to skate to where the puck's going, as it were. Liquidity rewards are coming your way if you've got fares and a bankroll. And we are going to make sure our members, particularly our VIP members, have the fares. They have them because no one's got a bankroll big enough to make markets at 20 different outlets. And so we're all going to be doing it. There's plenty to go around. And you know what happens with our members who make their markets based on our VIP fares and player props in the NBA and the NFL? They get filled. They are the in-demand player. The liquidity providers are going to be the belle of the ball here. And so we're going to make sure we're thinking really thoughtfully about making sure you know what fares should be and getting those out there. And I know maybe, Dime, I'm getting a little bit ahead of myself here with this stuff, but this is what I think about a lot for us is how do we offer fares on markets so folks can go make money? Top down's not going anywhere, but as anyone who's done this at scale knows, it has a shelf life. You get limited. What do? You either work with a team and get down in person, or you go to prediction markets and scale this thing. And there is going to be plenty to go around. And that's what I'm so excited about.
I could see too, kind of back to that top down question, if that's going to ever be dead, is that, if there are literally 20 different exchanges out there, we are probably going to see that some exchanges get hit first, or some people prefer to post on certain exchanges, like, bigger orders. And, that might be your indicator of this is the sharp action. And these other exchanges have, not had posted prices or bets being taken yet. So I think we can take a ton of guesses here on what it's going to look like, but I know we have the right guys and the right minds, the right access to tools, developers to make sure we figure out a way to make money in the new landscape of sports betting.
Abide, let me say, are we going to outmodel Citadel Securities? Well, it depends. Like, Citadel is just order fulfillment for Robinhood. They get, their payment for order flow. That's the business model. And I actually think payment for order flow is going to be the business model in prediction markets, because why did Robinhood take off? They took off because there's zero fees on all trades. They get paid by Citadel for sending them order flow. That is going to be the model. I'm just going to say it now. The model's going to be no fees, attract liquidity, pay for order flow. And I can tell you, as someone who has traded as an individual, professional trader in equities for almost 30 years, yeah, you can do great. You can do great. You got to know what you're doing and pick your spots and know what works. And that is, we are going to find the spots. There will be spots. If you don't think so, don't do it. That's like, no, I'm not going to outmodel Citadel, but I don't think I have to. We're not going to have to do that. So, let's not poop on what's happening here. There is opportunity. There's going to be a lot of opportunity, and I suspect in the early going, the profits are going to come from volume rewards, which I've said every week here for the last 6 weeks. You're going to get paid to post liquidity. It's going to enhance your returns by between 2 and 5%. And that getting's going to be like sportsbook sign-up bonuses in 2018 to 2020. And when those ended, you had to get sharp, and the markets got tighter. You don't have to worry about that right now. You got 20 operators looking for your money. They're going to pay you to have an opinion. Get ready.
The other thing I'll touch on that too is, the prop market, it's never going to be a fully automated, completely efficient market. There's too many injuries. There's too many different variables, honestly, in the prop market. So I think if you can originate props, I think you'll always have an edge, no matter what. I don't know if I can't remember the interview, was someone that models something Hobbs. I don't know if you saw that interview. I forgot who did it, but it was a guy that modeled NBA lines, and basically it's all injury. Like, he just knows how to predict injuries and who's going to sit on back-to-backs, and that's his whole edge. And he said it's never going to go away. He's like, I could talk about the edge. No one's going to be able to do it as good as me. No one can automate this process because I put in 6 hours of work every single day to figure out, who's playing and who's not.
I wanted to say real quick. He said, I noticed Abad mentioned that it sounds like the end of EV betting. Whenever you kind of think about it realistically, a lot of us have already come to the end of the EV betting, which is the top down. Us being limited to $5 and $6, even $30, that alone kind of just put the end to my top down. I always try to shoot more for the VIP section. I always take the bot plays, but I've been limited there for a long time. So personally, I kind of felt like the EV betting side was already dying down for me. And I think this is just opening up so many more doors. And one thing we're always going to do is stay on our feet. So with VIP, I think it'd definitely be no problem to have success in the prediction markets.
Definitely agree there.
Yeah, this is maybe the final thing I'll say about this. There are two ways to approach any opportunity. You can either determine ahead of trying at all. So everybody in the chat, I'm going to come at you a little bit. You can determine ahead of time that it's too hard and it can't be done. You can not try. You can put down your pencil and you can walk away. Cool. We're going to figure it out. We're going to figure it out. Dime, I know it. We're going to figure it the fuck out, and it's going to happen. Yeah. Because we figure shit out. Like, we're going to figure it out.
Yeah, I agree. I don't know what the future holds, but I'm very confident that I will figure it out.
And I know there will be plenty of edges. Yeah. As Jason said, too many humans involved. There's definitely going to be weak spots in all markets, even in prediction markets.
For sure.
Kalshi pregame, you can't, those prices are turd. They're garbage. Yeah. In game, you can kill it on Kalshi.
Yeah.
Can kill it.
It's so true. There's only so much flow that can be automated live. That bench, like when substitutions happen, like how does a bot know any of that information? It's
none of it.
There will be edges to be had. We'll find.
Amen. Amen. Abide, I appreciate you, man. I appreciate the tough questions.
Those are good questions. I like those a lot. That's why I pulled them up. Any other news related stuff? I have a couple. We won't even talk on them, but I'll just mention a couple things if you guys are done.
Yeah, that's what I got. And
what you got, Robin?
I'm just waiting for a week without prediction market news, so I talk about something else. But that's what's
going to be waiting a long time. When this takes off, it's going to take off.
Yeah, definitely.
just a couple things. Missouri launched sports books, so Missouri is now live. I think that was this week. They just launched over there in Missouri, so one new state to the state-regulated sports books. Then we have the transfer from ESPN Bet to the Score app that just happened on December 1st as well, yesterday.
So to rename our bots, man.
Real quick, actually, I renamed the bots this morning, but I accidentally messed up the coding, so I have to go back and fix that. The ESPN bots or the Score bots will be up and running tomorrow. They're currently down right now.
Oh yeah, I made that mistake one time too, where I switched the wording on our bot and then none of our code worked. So yeah, I've had that mistake. Other thing, I guess this is kind of a talking point, but did you guys see the class action lawsuit against Kalshi about them portraying themselves as a peer-to-peer betting service and then kind of duping their customers into just betting against them essentially? I
did. Most attorneys I've talked to about this have determined it is a long shot, wholly without merit, but that's not why they filed it. Law firm, and the firm that filed it has actually got a pretty serious track record of extracting a lot of settlement dollars out of these kinds of, class action suits. They can smell an opportunity and they're going to file it. And they're in the moment, it's got a lot of traction. People see class action lawsuit and they go, "Ugh." But anybody that ever operated anything at scale knows you're going to get sued. You're going to have success. You're going to get sued. It's all, some shit's going to happen. This case is going nowhere. However, it is driving a narrative, and the narrative is that prediction markets are about to steal a lot of people's cheese. So if you've lived off the regulatory capture of, a state license or a tribal compact in the case of Florida, where the Seminoles have the exclusive right to offer sports betting, or, any other moneyed interest, which I was posting a little bit about on X today. If you like regulatory capture and, like having the neighborhood all to yourself, you do not want prediction markets in this space because they're a threat to, your cash flow. And so just understand, anybody coming at these guys has an agenda, and that agenda is don't touch my stuff. And they're worried about it. And I think they should be, because clearly the market wants this stuff. But this particular lawsuit is an opportunistic class action firm trying to get in on the gravy a little bit with this stuff.
Yeah.
It's great marketing for them.
It's basically going after them, false advertising, which I feel like they've just given up on calling sports trading, and they're now it's just it's sports betting now. I feel like even the prediction markets are just going for it, assuming no one can stop them.
Yeah, well, it'll be interesting when it gets to the Supreme Court what they call it, because it can't be called sports betting.
Yeah, it'll be back to trading, and they'll have to rebrand everything.
That's right. I'm just going to sling trades until they shut it down.
Yep. So, all right, I'll make the big announcement here. We've had a lot of questions about the big, beautiful bill, how that's going to affect us in 2026. We've had a lot of questions about prediction markets and how that is taxed. So we're bringing someone in, Gary Conler, who is a tax expert, especially in the sports betting industry. He's a pretty well-known name. I know he goes to the Bet Bash every year and does a little seminar there to help educate bettors on the tax implications of sports betting. Obviously, starting in 2026, we got a ton of questions that we're going to ask Gary. So I do want the chat, whether it's now or later in Discord, to throw your questions out there to make sure that we're thinking about everything we want to ask him, because we want to get him a list of questions, by the end of the week here, so we can be prepared and he can be prepared to answer them next stream on Tuesday. So that's a big announcement. I'm very excited to talk to him because it impacts a lot of my life on what the hell the path is for next year for me. And I'm sure a lot of the members, I've been getting questions every single day about it. So this is going to be perfect for us, perfect for the members, and I'm really excited about it.
Yeah, don't make a mistake. Conler and Associates is the preeminent firm, and they service professional gamblers, poker players, and sports bettors. That's their business. Their business is professionals. do you think they're telling all their customers, get out of the game, stop betting? That's not what's
the whole
happening.
business.
No.
And we don't talk about the poker industry here, but professional poker players have it way worse than sports bettors doing this thing. I mean, people are talking about this being the end of professional poker. I mean, it's bad, but there are ways to do this. If you're smart, you get good tax advice, and you keep your records in the right way, you're going to be in this game and you're going to be fine. Pros aren't leaving the business. Trust me. They're coming up with strategies that keep them compliant and protect their backside. And Gary is our guy at SharpMoney. We reached out and said, will you come on the show and talk to our members? We got a lot of questions. He's doing it. And is very generous for him to do that. And I'm excited for Robbie to interview him next week. Bring your questions. It's going to be a super valuable hour, and I look forward to it very much.
Definitely. We will, I'll make sure that we release that so people pay attention to it next week, because it's not going to be a normal episode. It's going to be a lot of information for sure. So, all right. Let's get on to our talking point. So this is the question that I kind of proposed to you guys that we talk about, and I think it'll open up. I think we might overlap in our answers a little bit. So I'll go last because I have a couple different answers that I'm ready to give. But if you could do one thing different when you started first sports betting, what would it be with the knowledge that you have now? So I'll let Jay go first. Yeah, go ahead, Jay.
Yeah, let me take this. Y'all have been talking all night. One thing to start out, I've been sports betting since 2019. So to start out, I came into the game very early before books were even legal out here. But one thing I always was for my first 5-6 years of sports betting, whether it was top down, modeling, any of them, I was always very conservative. I think this came from stocks, being gun shy, afraid to get too into it and then get burned. So I always was very conservative, especially whenever I started out and swapped from modeling into EV betting. I was even more conservative. One thing I wish I didn't do was be as conservative. I always stuck around like a half a unit, and thinking about it, I could have almost probably doubled my profit I made in the past 2 years. So that was something that there is no one thing. I have a few things, but that's one of the main things. And also, as I said, I came into the game in 2019 and I was already sports betting, and then in 2020 the books became legal. One thing I didn't do was fully take advantage of promotions, but that's because at this time I was a little bit more square. I was only a year and a half into sports betting, and I put a lot of thought into it. So I didn't get to take advantage of promos. Like, I thought the books were trying to rob me. They would do like the Los Angeles Dodgers. No, it'd be little things like Otani 1+ strikeout plus 100. And I'm like, oh no, I'm putting $20 on that whenever my max was like 100. So I didn't take full advantage of promos. But one thing I do want to say is that's why I'm glad that Adam is pushing these prediction markets so hard, is because I am going to take advantage of this churn that we're going to get coming up. There's going to be a big boom in the start of this prediction market, and I think it's really just the time for everybody to take advantage of the free money. I won't say free money, but the extra money that you can work up. I think everybody should just take advantage of that. I didn't fully utilize the promotions how I should have whenever Sportsbook first came out, like maximizing deposits, just definitely getting into that and pushing harder into the promotions, taking advantage of what they have before they take it away.
Yeah, that was pretty much exactly one of the answers I had written down, just being more aggressive early on for sure. Adam, what do you got?
Well, it's the same answer. If I knew now what I didn't know then, I would have carved out a much bigger slice of my savings, frankly, investable dollars.
Yeah.
And put it in my bankroll. I should have, I've been a prolific saver my whole life. That's generally good policy. But I also like to take calculated risks with the money and have it work for me. Man, I could have gone out with 10x the bankroll.
Yep.
From day one. I would have been smarter about not burning books. I mean, I remember, Bet Rivers launched here in Illinois, and I hammered the snot out of college basketball totals, and I killed it.
You were modeling these, yeah?
Yeah, and it was just, and they're still the easiest book on the planet to beat. I mean, you could just, you just pick them off. They're ridiculous. And if you had a fair that was good, I mean, and it was all unders. And I was just by like 80% college basketball. I hit all the unders. And I mean, it was something like a 7 or 8% ROI. And I got clipped to $1, and it happened in about 6 months. And I looked and I'm like, well, I guess, I mean, what? They can do that? It was my first reaction was, that's ridiculous. Like, what do you mean? I I was so dumb. I didn't understand how it worked. Man, I would have done it differently. I just would have done it. I would have bet bigger. I would have. Now I know how to maximize the yield on an account. I didn't know that, but how could you know that? I just would have tried. I see, I don't know. You had three or 4 months, got 2,000 bets down. I had an edge. I'm like, this is a real edge. I feel like I'm in a good place. I should have scaled it faster, but I didn't. And I always wonder why I didn't do that. Because in any other aspect of risk taking, the minute I know I've got an edge, I press the shit out of it to the maximum risk tolerance that I have for it. I'm not dumb. I'm smart with allocation, but I underbet edges for a year, 2 years. It was dumb. I look back why did I do that? I don't know why. I don't know why I did that.
Yeah, that's something else I would have done differently too. Since this edge has died, I'd just like to talk about it. One edge that I did get in on early, this was 2 years ago. I think it was the Philadelphia 76ers. So their first quarter props were always so low. And for some reason, the 76ers were playing the whole first minute. And, this was the edge that the books were not picking up on. So their points line was 4.5 whenever these guys were playing 10, 12 minutes in the first quarter. Just that alone was an edge that the books didn't have. I just wish that was something I would have capitalized on. That's a dead edge, so I can talk about it now. But I just think taking advantage of the edges that won't last forever, because you can tell whenever edge won't last, is just definitely the key.
Sure. My answer here is it's very, all my answers kind of overlap with you guys as well. The main thing as I wrote down was just to scale more aggressively. And, I did scale well when I first started, but I never made, I started with a $2,000 bankroll. In the first month of Plus EV betting, I made $2,000, but there's no way I felt comfortable enough to double my unit size after 1 month, because it does take time to get comfortable raising your unit size. So I think I always almost ran at 1 unit being, a 0.5% of my bankroll instead of being 1. And that just really killed half my profits when I think about it at the end of the day. And the other thing too is just that $2,000 bankroll, at the time, that's all the really, extra money that I was willing to spend or could save really for the most part. And so going back, I wish I would have saved more to dive into it. But then you're starting with something that you're not comfortable with, and you're not really sure if the edge is really true. So for me to save up 10 grand and then dump it all at once is not really doable either. So I just think I would be more aggressive with it, which is exactly what you guys were saying. I had promos where it was $100 profit boost, 100% profit boost for $100. And I would arb the other side of it and, basically eat up a ton of profit. Or it was all types of crazy stuff where I would get all these profit boosts and I would squeeze a couple dollars out of it instead of
it's like arb betting. You realize you're like, oh, I can arb this for 0.5% or 1%. This is great. Then you realize if I've got a position that's moved my way, why the F would I arb this off? I have an edge. I have 4% edge here. Why am I arbing this off?
Yep. So the second
hold this thing.
We'll get to Buzzy's question here in a second. I'll just finish up. The other thing is just my knowledge of, making counts last a little longer. And there's no real way to do it, to a science, because every book limits differently. But I would definitely hold off on the props a lot longer. I wouldn't arb bet. I placed a lot of huge dumb arbs where I'm placing $10, $20 EV bets, and then all of a sudden $1,000 arb on some offline. To make $10. It was dumb.
Yeah.
Definitely cost me a lot of money in the long run. I thought it was smart at the time, showing my friends, hey, I bet both sides of this line. I made $10 here, but realistically, it probably cost me thousands in the end. But
one thing I wanted to ask, one thing we kind of all agreed on was being more aggressive. And we always talk about our startup funds, but what are your guys' thoughts about depositing? Maybe not weekly, but just depositing. I know we're in the profit and you really try not to deposit, but I was just curious your thoughts on that.
Well, I mean, the best advice, you like Mr. Limited on X and others who've talked about this, is the best advice I've ever heard on this is that, the books don't want our action. They want degen action. So to the greatest extent you can act like a degenerate, you can mask your sharpness. And what do degenerates do? Is always the question you should be asking.
Withdraw and deposit.
They withdraw after they win.
Yep.
That's what they do. They withdraw after they win. They deposit after they lose. And so, I can tell you what works for me is put a couple $1,000 in, bet your $250, $500 plays. If you have a winning week, take it out. Wait a couple days, put it back, bet it again. If you lose, deposit immediately. Bet main lines only, don't bet props. That's the only way I can make this worth my time at this point. And, I've got some outs that have lasted because I'm wait until an hour before post to throw down. And, you do some damage on a 10% FanDuel account. You can do some damage on a Caesars account. We'll let you hang around if you've developed it properly, let's say.
Yeah.
I'd say the biggest mistake I made when Hard Rock launched in Illinois was hitting it as hard as I possibly could on my VIP NBA slate last year. It lasted 3 weeks. I made about $7,000. And now I can't get more than $10 down on anything at Hard Rock. And I'm just like, that was so dumb. Why? I knew better. But I figured, you know what? I made a conscious decision. I'm going to hit this thing until they kick me out. I don't have time to mess with this. I'm just going to hammer them. And I decided, kiosks are kind of the next solution. That's a whole other episode, man.
Yeah.
You've been down that road.
Another episode.
So let's answer Buzzy's question here. What is the sample size or moment that you realized that you had a legitimate edge and you were, comfortable scaling it a little bit further? Said he's struggling to build DVIG formulas and find consistency. So, we've had different edges. And I would say, Sigma could definitely talk to you about what sample size you should be looking for to return an edge. He has a whole video on variance and, what percent of bets actually equates to a certain edge. But for me, I would say when I first started top-down betting, I understood it all. I understood the math, but I wasn't fully confident in it until I experienced probably 3 or 4, 30% downswings to my bankroll and recovering from those. Recovering from those every time is what made me realize that I had a legitimate edge, where just because the bottom fell out does not mean it keeps going. It recovers from there. So for me, it was probably 6 months to 8 months in where I experienced multiple big withdrawal downs on top-down betting where they recovered. And that's built my confidence level from years ago to where if I'm top-down betting main lines, which I'm so confident in, I'm just going to keep going no matter how ugly it looks at the current time, because I know it comes back up because I've done it 50 times already.
Yeah, I'd like to say, as I get a little bit more familiar with what I'm betting, I'm able to tell that my edge is good or bad with a smaller sample, I feel like. I think closing line value is very important, but sometimes that could be finicky on props. People can post a prop and move it, like Alex Caruso maybe. I think just like promos, seeing a lot of consistency. Like my promo chart goes from left to right, straight up. And just seeing the edges like that. If I see that over 200, 300 bets, if I'm doing this over a month and I've been green 20 out of 30 days, then I definitely feel like my edge is there and I start to feel more confident.
Yeah, you can find, Robbie mentioned the video, on the Lines and Logic series here on our YouTube channel. Ran the math. 2,000 occurrences is my very specific answer. You need 2,000 occurrences of whatever edge you're betting for the math to say this is real. Okay, for the math to say this is real. When do I start to get a first check on it? Probably 500 occurrences. Get a pretty good sense of it. But to really know what your 1 and 2 and 3 sigma standard deviations are from where you should be landing on the bell curve, which is, as I've said, where my name comes from. To know what 2 sigmas, 95% of occurrences are going to fall within a range over 2,000 bets. Once you get there, I mean, you're just then it's like max it out. And so you can get 2,000 occurrences very quickly in the NBA on a daily turnover. It can take you 5 years to get 2,000 bets down in the NFL. So like the answer is 2,000. I can tell you empirically, it's 2,000 occurrences will tell you if you have an edge or not.
I mean, so the one thing there is like, you can pretty much tell within 100 bets if you're getting closing line value, whether it's going to work or not.
That's right.
As long as the closing line value means something, like NFL spreads. If you're beating NFL spreads 80% of the time, you're going to be profitable long term. It's just an efficient market. That's how it is. If you're beating props, WNBA props, you're beating the market every time. You might want to see 2,000 bets to see if your edge is true or not, because the market is just very volatile. I mean, for myself, the only questionable edge I'd say I have or wasn't really sure about is like my running back projections. When I started those the year prior, I pretty much finished break even. It was my first year modeling, and I guess that's where it's really hard to tell, do you have an edge or not? This year, I took it much more serious, did a lot more research, rebuilt the model. And then, I mean, I was keeping track of CLV every week. And the first, 2 to 5, 6 weeks, I mean, I was on 10 plays, I would gain like 40 yards in our favor. So it's like, I just know it's an edge. The market is moving so much. Even if NFL running back market isn't that efficient, my edge is big enough to where, I trust it on a small sample size.
Yeah, I agree with you, Robbie. I think something very good to see. Like one thing I noticed whenever all 3 of you guys, you, Sigma, and MathWins post bets, you have like a 5 or 6 minute window, and you start to see other books move their odds. And I think that right there is also a good sign that I don't know if the books have y'all marked or what they're doing, but I do know it's always good to see the odds move in favor whenever y'all post a bet.
Well, our releases move markets. I mean, you can see it. We have a big enough member community where, if we release fares, if I release fares on what I'm essentially, seeded the running back market to Dime here, who I would tell you his edges are better than mine on these plays because he's focused. Wide receiver, tight end, yards and receptions, quarterback, attempts, completions, and yards. I know I've got a 4 or 5% edge on it. It's good. 4 or 5% edge net of VIG. Like I can beat these markets. We ship the fares, they move the market. But they don't on exchanges, which is why we say make them on NoVig at X price for fare. You're getting a good price on this. If you have fares, you can do real damage. You can do a lot. More on that, I'm sure, in coming weeks. But like there is so much opportunity out there, and it is my personal hope that we can help you connect to your 8th grade algebra self and start to do some of this modeling yourself. I suspect we're going to be helping our members think this way in the coming years.
Definitely. We're running at the 50-minute mark, so we usually wrap this up in an hour. So we're not going to go into the plus EV betting today because we've been answering a lot of questions. But here's another question that I want to get to before we wrap up this stream. How do you tell if a given market is efficient or not for smaller sports? And it really comes down to how liquid the market is. Like, for an example, NFL spreads are the most liquid market, meaning there's so much money shaping up these lines. Some of the sharper books will take $100,000, $200,000 max bets to shape these markets up. Meanwhile, a WNBA spread might only take $2,000 per bet. So the liquidity that's shaping a WNBA market, I'm just throwing numbers out there. Maybe it's $1 million on a book, where the NFL
that's not far off, man. This is not big handle on the WNBA. No.
So the complete guess, but let's just say the NFL is 100 to 1,000x that handle. That money shapes the market. So low liquidity markets where the limits are low are just going to be your less efficient markets naturally. Easier to beat markets. The NFL spreads are much harder to beat than WNBA spreads, but you're not going to be able to scale that edge because the liquidity is so low. No book is going to let you bet. You have a massive edge on a WNBA game. You come and try to lay $100,000. No one's going to let you do that because they know it's not an efficient market.
Yeah, I look at the limits. The limits tell you, limits are confidence. High limits means you are betting into the efficient line. If you can get an edge to a Sunday morning NFL spread, what are you doing on this stream? Like that, that's exceptional. If you can model an edge to a Sunday morning NFL spread, congratulations. I mean, that's pretty incredible. You can top down it on Sunday morning. So like if you see a 5 or 7 cent edge on a Sunday morning NFL spread on circa, bookmaker DVig basket versus what Hard Rock or DraftKings is offering, it might only be a 1% edge, but that's an edge on a line that is a true 50-50 proposition. Like, you bet that big. You're betting smaller edges at bigger volume. That's another lesson maybe I could say go back and learn. Like, in the higher limit, more efficient markets, smaller edges are better. I would rather bet bigger volume at smaller edges over more occurrences in highly efficient markets where I know I can beat them over time than work my ass off to get $1,000 down on some bullshit WNBA total at 10 different sports books through a team. It's just not, it's not worth the brain damage. And as I've done this, over the years, it's better. I would rather get a lot of money down in an efficient market with a smaller edge. It's just less brain damage.
Sure. Here's one more question. Is there any way to figure out the limits of a given market without actually placing the bet? I know how some books like Prime post their limits. So I'm not sure if you're familiar with our Discord, but that's exactly what it does for Pinnacle. It tells you exactly what the limit is on Pinnacle and where the odds are moving. So when you see, it's kind of the bread and butter of what we do here, is when you see a Pinnacle limit go from $5,000 to a $10,000 limit, and then their odds get priced down, that basically indicates that Sharp Action was waiting for that limit increase to get priced. Now, with that being said, we only flag plus EV plays. So you only see that when there are plus EV opportunities. But let's just say in the near future, you will be seeing, you'll be able to look at Pinnacle limits without seeing plus EV bets. We'll give that a little teaser. All right, that wraps up all of the questions here. So we'll shout out NoVig one more time. I have the link to sign up in the description down below. You'll get 10% match on your initial deposit up to $1,000. So if you deposit $1,000, you'll get $100 for free. So really great sign up there. We didn't get to bet on NoVig this stream. Usually we do a couple bets here, but they are right now the most efficient market out there, where, close to game time, you're seeing plus 101 on one side, minus 102 or minus 103 on the other. Very tight spread. So if you are looking to place any types of bet, I'd be going to look at the NoVig price before you place a price anywhere else. So I think that'll do it, guys. Any last words? I'm really excited for next Tuesday already.
Yeah, if you got questions about the tax implications of OBBB, tune in for our special guest, Gary Conler, next week. He's our tax guy. He might be yours. He knows his stuff. They just work with gambling teams and professionals and semi-pros. So bring your questions. It's going to be a very valuable episode next week.
If you guys do have any questions and you want to post them in the Discord or track them somewhere, you can post in the Discord and tag me. I'll keep a list of all these questions that we have. So if you have any questions, make sure to tag me. Take full advantage. We're bringing a CPA right to you. Ask everything you want to, and figure out what you're gonna do, or figure out the best way to move for the next coming months.
All right, that's a wrap. Thank you guys. We'll see you on Tuesday.